Rolling options is a strategy that traders can use to save money and manage risk. In today's video, I have a pretty big position on IBIT, which is the Bitcoin ETF. And I'm going to show you how I roll both of my options. One is going to be a covered call and one is going to be a sell put. I made $34,000 by selling these options on IBIT so far. I have protected my position partially with this position, and with the sell puts, I am in the money, so I am at risk of getting a sign. So what I want to do is I want to try to roll a credit. I always try to roll for a net credit, even if I have to go out further in time. Always rolling for a net credit and collecting income is the best way to make money as well as reduce your risk. Sometimes I go for a debit, and I'm going to show you both of these examples in today's video. This is going to be a very important masterclass on rolling as I do this live. So basically, I have a big position. This was a position I've been holding for a while, makes up 26% of my portfolio, and it's just shy of $1 million. Bitcoin has not really been performing well at all. This is unfortunate. It's very difficult to predict Bitcoin in general, and this is a crypto investment that I made some time ago. I was actually up on this position significantly when it was at 71, but now we're sitting at under 58. So let's handle this one at a time. First of all, I have a 65 covered call. This 65 covered call was a hedge when the position went just under 65. I wanted an exit point at 65. I, of course, did not get my exit point, and now the ETF is a lot lower, and that's completely okay. Here at the Options Retirement Academy, my goal is to generate income and teach others how to make passive and safe income. IBIT is not the safest ETF. However, having crypto exposure is a good idea long term. And I want to show you right now how in the short term, I manage risk. So this position has saved $37,000 of my entire position, because had I not had this position, well, I would be down more money. This actually saved me. But now I have made 95%. And because I'm up 95%, it doesn't really make sense for me to hold this option for about, a little bit over a week to make the additional 4%. Although it's pretty good, it's $1,900, I can make more by rolling this position. So I'm going to go to roll this position. I'm going to show you the different options that you have when rolling a covered call. In this case, I am rolling a covered call that is out of the money. I am rolling it to produce more income. So what I'm going to do is I'm going to first of all look at the January expiry. If you're looking to retire and generate income, you don't have to do weekly expiration. Of course, I can roll this option more shorter term, and let me actually show you what that looks like, but I'm probably going to go for a 2-month option, because on this channel, I think retirement should be simple. It should be easy to follow and understandable to a beginner. That's my goal in this program, is to show anyone how they can reach retirement and guide you there and give you all the fundamental education so that you can do this for yourself. I have about 10 years of experience trading, 6 years of coaching, and after working at Goldman Sachs and 2 other hedge funds, I have achieved retirement, but also I'm even more proud that I have coached so many other people to achieve retirement themselves. This is where my passion is. So let's show you right now this specific example of a 65 covered call, which is worth very little. What I'm going to do is I'm going to roll it down. I'm going to roll it down, and I'm going to roll it to the December 19 expiration. And right here, if I were to roll down to 62, I would collect a lot of money. I would collect a total of $20,600. However, let's take a look and see what would happen if I were to sell the same 62 covered call for January. If I sell the 62 for January, I'm going to be locking in $33,600. So it's not exactly a double in premium, but it is a lot more money up front, and it gives me more certainty up front that I can lock in $62. Because what can happen is, let's say that in a month from now, when it was like end of December, that IBIT actually went down a little bit more, down to 56, let's say, or 55. Well, at that point, if I wanted to sell the 62 covered call, it would not be worth that much. So that is the trade-off. That is the trade-off of doing shorter-term options. If the ETF or stock continues to go down, you won't be able to lock in that higher price. In fact, let me show you exactly what I mean. because I could just sell a covered call leap option. So if I were to sell a January 15 leap option, then of course I can go even higher and still lock in an amazing return. Right here, you can actually see how I would collect a whopping $118,900 by selling a covered call and rolling this option out by over a year, 420 days. Now, that's a bit much and I don't need to do that. But if I were to do this, pretty certainly Bitcoin would probably recover to 65 or higher, and I would be locking in a ton of money. And if it were to go down, I would have an entire $12 for it to go down. So even if it went down to $46, I would completely be fine in terms of not losing money. Okay, but that's a really long bet. What I'm going to do instead, I'm just going to go for January and just slightly roll this option and collect more income. Now, I'm going to look at the 63. The delta is 41. That's fine with me because, look, my break even here is 66.20. Let me actually go back to my position. My average cost is $63.99. I'm not down that much on the position, but of course, I'm down a lot of money because it is a big position. So my goal is just to make money and be above my average cost of $63.99. So let's go back and actually execute this trade. You can see that my average cost is $63.99. So that's basically what I want to get out. I want to get out a little bit higher than that. So I'm going to go for the January expiration and I'm going to go for 63, and my break even is actually going to be 66, and that's amazing, right? So if I get out, I get 63 plus $3, so I'm going to be 66 in terms of an exit price, and now I'm going to generate $30,000 of net credit on this position, and that's going to be amazing. So I'm going to click continue here, and I'm going to execute on $3.03. Let's go for $3.02. Okay. So there we go. I'm going to submit this, and there we have it. I've collected $30,000 on this position. I've made $34,000 already, and now I have collected another $30,000. So that's essentially right around $65,000 worth of collected premium. 34,000 of which I made. Oftentimes when I've made videos in the past on covered calls, people will point out how that money is not yours right away. And they are correct. It's not necessarily yours right away, although the cash is in your account, because you have an open position. So the position still has to expire. But in this case, I have made $34,000, and no matter what happens, whether IBIT goes down, up, sideways, I have collected over $30,000 in premium right now. So I've made $65,000 total, at least at expiry of January 16. I will have made that amount of money. So that's what rolling looks like. That's what selling a covered call looks like. And that is a lot of money, of course, to collect. Now, I want to go into the second roll position. So now what we're going to do is we're going to look at the 63 put option. And this is very different. Okay, in the first example, I made money, and then I made more money by selling another covered call position. Well, that was good, but what does a sell put look like? Well, this sell put position specifically is in the money. In the money because IBIT is below 63. So at expiration on January, I will be getting assigned more IBIT. And that's not something that I necessarily want to do because I already have a big position. So how do I reduce risk and how do I roll this position down? Because I want to roll it lower. I want to roll it lower from 63 to something lower because that way I don't have to buy it at 63. You can actually see I'm not down that much on this position. I'm only down $3,000. But here's what I'm going to do. I'm going to go to roll this position, and now you are going to learn how I roll a sell put. Rolling is a really good strategy to basically change the strike price. You are manipulating the strike price. Whether you want it to be higher if you want to keep the stock or lower to make more money, or it depends on the call or put. I don't want to confuse you, but easily said that you can change the strike price in the way that you want to change it and still make money. Again, I like to do it for a net credit if possible. So let me show you right now. We're going to go to an expiration of March. This option currently expires in January. So if I were to go for an option that expires in March, that's going to add 2 months to the position. Now, you can see here, if I were to roll from 63 to 63, well, I wouldn't change the strike price. You can see here that I would make a total credit. I would make a total credit because of the passage of time. Because there's more time here, there's an extra 63 days. Because of this time, it is worth $2,800. That's pretty nice, and that's proof in and of itself that you can make money trading options without even taking on additional risk. You can see here, the only thing that I'm risking here is time. The strike price stays the same. But here's something even better, okay? I can move down. So I can go from 63 to 62, and now I'm still collecting a credit, but clearly here, now I have a benefit. I am reducing my risk. I am taking my strike price down from 63 to 62. Now that's a real benefit. That means I'm reducing my strike price by 1, and now I don't have to buy it for 63, I can buy it for 62. So this is exactly what I am personally going to do. I'm going to go from 63 down to 62 and collect a nice credit. But you can also see here that I can go from 62 to 61, which is also pretty good. This is also actually nice since I get $1,000 in total credit and I get to move down by $2, which is better than $1. Now, third example I want to show you, I know I said I'm going to do the 62, but I wanted to show you the 60 as well, because here you can actually see that I can go from 63 down to 60, which is a very significant move of $3. That is very significant, especially over 15 contracts. Each contract worth 100 shares, so this is $300 in savings, and then I'm going to do this 15 times. Now that's a lot of savings, right? That's 300 times 10 would be 3,000 times, so it would be $4,500 I would save. Pretty good, pretty good. I like that. So I get to save $4,500 and I get a total credit here of $150. I'm actually going to do that since I have a really big position already. I want to maximize how much I'm going to move down. Here, I'm not really going to make much money, and that's completely okay because, again, I get that benefit of rolling the position down. Robinhood is asking if it's a credit or a debit. Here, it actually will be a credit. Although a small credit, still a credit. So I'm going to go ahead and execute this trade right here. And there we go. That trade actually got filled. So in this video, you can see how I had made basically in premium $65,000, some from the past and some from the present that I collected. But in total, it'll add up to $65,000 that I have made by hedging IBIT, by selling options. This has significantly helped me. And then I showed you a bonus example of selling a put option, how I rolled the 63 strike down to 60. If you want to see more rolling, if you really want to master rolling for yourself, it is difficult because it depends on the stock, it depends on technical analysis, and so many other factors. If you'd like to learn more, I'd be happy to help you. I have one-on-one coaching as well as live group sessions in the Options Retirement Academy. You can learn more by visiting the first link in the description and scheduling a free consultation to learn more about how the Options Retirement Academy can help you retire and achieve your goals, as well as consistent, passive, and safe income by selling options. And one of the skills that I really work on is risk management and rolling, such as what you have seen in this video. If you enjoyed this video, make sure to subscribe, and I'll be happy to see you in the next one.